Today, I have the pleasure to have on the show Oonagh Berg. She's a globally recognized compliance expert with over 20 years of experience in traditional banking, fintech, and cryptocurrency. And that's why I'm super excited to have you on the show. Welcome, Oonagh. How are you today?
I'm very well, Marco. Thank you for having me. I think my name is just not a mouthful. That whole overview is a mouthful as well. So thank you for kindly reading through it. I'm really, really honored to be here. I've been following your channel for a while now. And, as I've said to you before, I love it when I see people in our space doing great things, especially supporting education, awareness, development. So really proud and really honored to be part of this. And also, just as I mentioned, really great work that you're doing. So keep it up.
Thank you. I appreciate it. Thank you for your kind words. I wanted maybe to start this session, if you could please expand on your background and what inspired you to focus on financial crime prevention and compliance.
The first part of your question, kind of what inspired me to focus on financial crime, I don't think it was through choice. And, I remember when I started out my career, I started back in the early days when compliance was still coming together as a function. Previously compliance fell under legal, or it fell under, in some instances, finance, and it slowly then branched out into its own right. So I joined kind of the compliance industry back in 2005, straight out of my legal training from the European Central Bank. And when I started in compliance, financial crime, AML compliance was the area that nobody really wanted to work in. It was not, if I say the word sexy, it's much sexier today than it's ever been before. And it wasn't really until like 2012 when we really began to see significant changes coming through with various regulators and FATF that financial crime started to get the platform that it deserves and that it needed to have. So that's kind of how by default I got into it. Did I intentionally, look to go into financial crime compliance? No. I was more front office advisory, product, market abuse, policies, procedures, so private side, public side advisory. But back in 2012, 2013, I joined a private bank in Singapore, and it was just when the new MAS regulations had come out. And obviously financial crime was a significant focus area, and we needed to overhaul the entire GRC framework. And one aspect of that clearly was financial crime. And this was quite a new entry area for me. I had to go back to basics and really understand from the foundation what were the foundational requirements for building out a solid, financial crime, AML, CFT framework. And that's really where I started. I think the luxury of that was that I didn't have any preconceived notions. I knew how the area functioned within compliance, but I was able to take the brand new regulatory framework and build from there. So it was an amazing building experience, an amazing learning experience. Probably one of the biggest deep dives I've done in my career to date. But then there's been some different learning experiences, but from a financial crime perspective, that literally was, I was thrown into the fire, and I suppose the analogy is they threw me into the swimming pool and I could either swim or sink. Yeah. And I was literally, by the end of it, I'd like to say that I was, Olympic standard. I was competing with the Michael Phelps of the world. I'm only joking, but it was an amazing kind of, what can I say? It was introduction through fire. And we were also under the guise of a regulatory inspection at the time when I stepped into the role. So having the oversight of the MAS on site whilst implementing the requirements and then having all of that reviewed as well was just an amazing learning curve. And that was actually a point in time where I had such, I developed such significant respect for the MAS as a regulator, actually, because they're not a enforcement-led regulator. They're very much in the background, hand-holding and supporting the industry to really develop the standards and to get it right. And innovation, it requires us to make mistakes. We need to have that psychological security to say, well, look, I'm going to try this. These are the various options, and you need in compliance, I think we don't give ourselves enough opportunity to make mistakes. Because that's how innovation happens. And if we look at all of the enforcement action that we're seeing, there's no variations between the enforcement action. What we're trying to do is we are trying to bridge over the same gaps with the same controls, maybe in a again, sexier or a little bit more kind of advanced way. But what we're not doing is going back to the foundation to solve the foundational problems. And that's something that the MAS does really, really well. And actually, interestingly, FATF a couple of years ago on their mutual evaluation said, one of the negatives is you don't take enough enforcement action. And when I look at other enforcement-led regulators, I can't say that they would support the industry as well as what I've seen the MAS doing. So that is not a plug for the MAS, but I'm just saying that it's now that I work very much on the tech side and in AI implementation and looking at innovation in terms of technology, in how we can better identify fraud, money laundering, terrorist financing, something, by the way, the last part, terrorist financing, is something we do terribly, terribly as an industry. One of the things that I'm very, very conscious about is that we need to see much more support from regulators in terms of the financial controls and the technology, supporting technology implementation.
You've recently announced a collaboration with Nick Leeson to support victims of financial scams. What motivated you to take on this initiative, and what do you hope to achieve through this collaboration?
It's been an absolute privilege for me to get to know Nick. And I've actually known him for a few years now. Back in 2020, when we set up Raw Compliance to support industry development, maybe drive innovation as well through discussions and awareness and training, I reached out to all of the key players and the case studies that we're all familiar with in the compliance area. And one of those, obviously, I reached out from a UBS perspective, SocGen perspective, and obviously the Barings perspective to Nick. And he was somebody that surprised me in the most positive way. Firstly, he's an incredibly humble individual. And secondly, obviously, we're all aware of the kind of the Barings story, but one of the things I really admire about him is that he constantly speaks about what we can do better in the risk control space to protect customers and to support the industry. And, he's very, very vocal about this. And one of the things he does say is over the past 20 years, he's not really seen much change in how risk controls have been implemented. And it's a worrying, but also not entirely untrue statement, because our technology in many respects is currently lacking across the board. So recently, again, we got back in touch through a mutual connection of ours, Dean Curtis from LexisNexis. And basically, the problem statement was that a few different people had been victims of financial scams. And the question that he posed to me was, as a regulatory expert in this field, what more should have been done to protect these individuals? And when you break it down, you find a fundamental failure of bank controls in terms of fraud detection and post-event, transaction monitoring. And it was actually quite frightening to see that for all intentional purposes, banks have the regulatory boxes ticked for tool implementation. The protection for the customers in terms of their accounts being used as conduits for financial crime just aren't there. And it's, for somebody that has worked in the industry this long, I've 20 plus years, Nick himself, nearly 40 years, it's actually a sad state of affairs for both of us to take a step back and say, look, the two main statements that every regulator makes is our jobs are, one is financial institutions, one is to protect the integrity of the financial market. Okay. Secondly, is to safeguard and protect our customers. But we are failing in both respects because of a lack of investment in technology and actually a complete lack of awareness in terms of typologies of financial crimes. I don't see an evolution happening in-house. It was interesting, a couple of years ago, it was Coinbase was faced with an enforcement action in the US. And I know it's a crypto firm, but the reason for the enforcement action was that their business grew, but the sophistication of their AML controls didn't, to support the evolution of their business. Okay, that's a very, very fair statement. All firms should be doing that. But we have come to a point that many financial institutions have become stagnant in their development of controls. There's many reasons for that. They can't see the wood for the trees because of regulatory updates. They're maybe trying to diversify too much across products. We saw after, obviously, the last financial crisis in 2007, 2008, banks such as, ING is a good example, having to separate out different business activities because regulators said, look, you're doing too many things. You need to focus at a core business so you can better protect the customer and also prevent failures of banking institutions going forward, which would affect the market. But what we seem to have really lacked and failed to do as an industry is implement technology, implement new technology, and we failed fundamentally to protect our customers. So that's what Nick and I are really working on at the moment, is looking at individual cases that are coming through. And some of these cases, and I'm happy to go through some of the typologies, they defy belief in terms of how could this have been missed. One example, which still blows my mind, one individual lost just under £1 million, involving 9 transactions to Hong Kong banks from their retail account in the UK. This is an account that was used for day-to-day transactions, going to Tesco's, going to pay something on Amazon, paying their car insurance, nothing exciting. But suddenly you see payments going out to Hong Kong for 9 different payments, all structured same day inward and outward flows of up to £160,000 at a time. Not one of these payments was stopped. Not one fraud control appears to have been, alerted. Not one transaction monitoring alert appears to have been created. Most likely it was, but what probably has happened is it's sitting in a backlog somewhere. And as well as I do, the backlog problem in our industry is at an epidemic level. And HSBC was quite vocal about that when they moved over to implementing AI functionalities. They made the point is, we have a system that's not fit for purpose in terms of transaction monitoring. All we're doing is wading through a continuous backlog, which is not reducing, no matter how many people you throw at it. And that's not the solution. But with implementing AI and solutions, they were able to find complex networks in their books that they didn't even know existed. So this is where seeing the victims and seeing the positive attributes that come out of implementing technology in the right way, it's just incredible. It really is just incredible. So I'm a massive advocate here for working with Nick to raise awareness on these individual cases we're seeing, but also then to question how these banks failed. And what most likely is going to happen is we're going to see enforcement action on the back of this against banks. Last week, we saw in the US, TD Bank, for example, are going to face potentially over $2 billion, US dollars worth of fines for AML control failures. But what actually happens to the victims, i.e. the individuals who have been the victims of financial crimes? Are they going to get recourse? Are they going, who have lost their entire life savings? The answer is no. There's enforcement action, there's regulatory fines. The bank then throws millions at fixing the problems, and in some cases not really fixing, just plastering over a gap. But the actual victims of the financial crimes are never getting recourse, and they're never getting retribution, so to speak. They're not getting back their life savings. And in some instances, Marco, and I don't mean to kind of sound like a negative Nancy on this, this podcast, but in some instances, what's happening is people are actually taking their own lives as a result of this, because they've lost everything. They've worked their entire careers to build a nest egg for retirement. They have been scammed through some quite manipulative scams. Like, these are psychologically manipulative scams. And when they go to the bank to say, hey, look, I've banked with you for the last 40, 50 years. I've been a great customer. I've never had an overdue credit card bill, and I've had my mortgage with you, everything. Can you please help me? The bank's response, not our problem. Goodbye.
Mm.
So something fundamentally needs to change. And this is kind of like a passion project, I believe, for both Nick and I, because we want to see positive change happen.
Yeah, you talk about the victims of financial scams, which of course are so central, and the recovery process can be particularly overwhelming for them. Can you maybe walk us through the key steps that they should take immediately after discovering they've been scammed?
Absolutely. I think first and foremost is awareness. In fact, what's happened is we've met some very sophisticated, intelligent individuals who haven't actually realized that they were victims of scams. So it's actually identifying it is actually a challenge for some individuals to start with. The first step that needs to be taken is twofold. One, the best thing you can do is traceability. It's go immediately to your bank to notify your bank that there has been a scam, so that they can try to the best of their abilities to try and stop the payments in other jurisdictions where they've moved to. In many instances, unfortunately, this is like if you ever look at a diagram of like kind of blockchain analytics, this literally becomes, and you have the epicenter, which is the individual, and then the payments go to one account and then immediately disperse into multiple other accounts. So getting those monies back in many instances is very challenging because the monies will have already flown the nest. But what we want to try and be able to do is to make aware other people potentially that there is an issue. And secondly, to make aware the other bank that holds the account so they can immediately put a control on the account to prevent any money from leaving that account. Because obviously, if there is still money in the account, there is the potential of recourse to reclaim those money. So that is your immediate step, is to notify the bank and to notify, what we're finding is we're actually having to notify the other banks ourselves. That's one of the things that I'm really, really, and luckily because of the connections that Nick and I have, we're able to do this. But I've personally had to reach out to regulators, off the record, and reach out to other banks to say, hey, wait a second, what about this account? What's happening? They're completely unaware of it. What is really, really lacking right now is the banks, when you notify them of a financial scam, they'll submit an STR. They will then, if you submit, you will then need to submit a complaint to the bank to say, hey, why weren't you aware of this? Why did you allow this typology to happen? And of course, banks cannot be held accountable for your own investment decisions. That's your decision. What the bank can be held accountable for is sudden changes in your account activity, which should have immediately set off warning alarms on fraud, especially when structuring is involved. So one of the things that we're quite interested to see is how the banks are responding on this. What is not happening is there is not international cooperation between banks. We're not seeing the banks in the UK notifying overseas accounts, which is, quite shocking. When we've looked into it, we've been able to identify that for certain, banking entities that have received the monies, in fact, they had previously closed the accounts because of money laundering concerns. And then the other question is, well, there is the individual's bank notifying the recipient. But what about the recipient when they identify illicit activity and close an account and submit an STR? Where's the backward channel? Where is the feedback to all of the inward remittances that they saw to those banks to say, hey, we closed this account because we're a suspicion of illicit activity? And this is where the problem statement lies. One, data privacy. In terms of sharing that information. Two, it is a suspicion. The banks don't necessarily have a clear, we know that there is illicit activity, we have a suspicion of it. So submitting an STR and closing the account is their regulatory obligation. And that's where it stops and starts. But as I just described, there's a massive kind of layman person issue here. If you ask a person on the street what makes sense, that two-way communication makes absolute sense to protect individuals, and it's not happening. So to your question, immediately notify your bank, file a police report, and file a complaint to your bank as well. And then see whether or not the bank is able to reclaim those monies, and whether the other bank that's received the monies has been able to freeze the account. If crypto is involved, the bigger positive here is that we can do much more work on blockchain analytics to detect the movement, unless, of course, privacy coins or multiple mixers have been involved. There's always some kind of nuances, but when I see crypto involved, I'm actually a little bit more, excited that we can do something than when I just see fiat involved.
Yeah, you just mentioned now the crypto, so I think it could be interesting if we talk about, because scams are, of course, a very growing concern globally, right? And in your opinion, what are the most common tactics used by scammers today, and why do you think they still continue to be so effective?
I think it's the simplicity of it and playing on vulnerabilities. And that's the 101. Weirdly, scammers are not getting more sophisticated in terms of the use cases. In fact, they're becoming more simple. So some of the key ones that we're seeing is money mules, where people unwittingly become conduits for illicit activity. So job advertisements, I don't know if you've received them, but I get multiple kind of WhatsApp, would you like these videos on, on YouTube or Instagram, and we'll give you €5 for liking 2 videos. And then, and this is on WhatsApp. And then we'd like you to move over to Telegram, where you can be introduced to my colleague, and we'd like to give you a contract where we will pay you, £200 a month or €200 a month just to like these videos. And then you give them your bank details. And then the next thing they'll say is, we would like you to also help us pay out people within the network. You become an employee of ours, so we'll pay you. So, we're going to transfer to you, let's say €200. You're going to pay out €180, but you're going to keep that 20 for yourself. And that's the model. What the individuals involved don't realize is they're getting €20, but that movement of money is basically by default money laundering. They're actually moving illicit funds. It's so simple. It's so simple because they've played on the vulnerability of easy money. They've played on the vulnerability of a society where there is, a lot of people out of work. And, especially younger people are like, oh, this is fantastic. This is students, etc. And what they don't realize is they have been compromised to an extent where not only can they now be charged with money laundering activity, but their credit history is completely shot, and it could also impact their career opportunities going forward. So money mule scams are 101 simplicity, and they prey on the vulnerable. The other one, obviously, is pig butchering. And also, well, pig butchering is more kind of on the investment side. And I think that's a very, very specific one. But romance scams, we're seeing much more sophistication in these ones, and it's actually really, really worrying. They're targeting predominantly single, or let's say single individuals in the kind of the 60 age range. So luckily you and I are going to be okay, Marco, for a while, but they're targeting people between the ages of 55 and 65, just pre-retirement. Especially those who have been bereaved, who may still be going through that bereavement period. And what they're doing is they're reaching out to these highly educated individuals and saying, hey, would you be interested in learning more about these investment opportunities, very low grade, low risk, etc. Very, very simple. But then what they begin to do is they begin to create a romantic relationship. And it starts off as a friend. So you've got these bereaved individuals who suddenly have this new friend, and then that becomes, to an extent, romantic over time. And these go on for months on end. And the only thing is, if individuals did some reverse engineering on the pictures, for example, even on Google, you would find that a lot of this stuff is fake. But that's, again, awareness, training, understanding how to do that. So what you have is these vulnerable individuals who are led down a path of, I've potentially met someone else, I've potentially found somebody else in my loneliness. And then they ask them to start investing for their combined future together, setting up fake trading platforms where they're showing them how the investment is making money and then basically just bleeding them dry of every single penny. We've seen individuals remortgaging their houses, selling their cars. It's insanity. And these are all people that are about to become retired. And as I said, in some instances, people are too embarrassed to speak up. And in other instances, some people have taken their own lives as a result. So that psychological manipulation in those scams is something that I've not seen before. It's dark. And they're targeting intelligent people. And that's the worrying thing, Marco, is the money mule scams are targeting the vulnerable who need a quick buck. The romantic investment scams are targeting individuals who potentially have been bereaved, again, vulnerable.
Yeah.
And then you have obviously the pig butchering scams where it's kind of, investing into crypto. And one of the things that what worries me as well is we always talk about the scammers as being the bad people behind this. In the pig butchering scams in particular, many of the scammers have actually been kidnapped themselves and are being held in various camps on the border of Thailand and Myanmar. So this is a really serious situation where people like you and I have been kidnapped, being forced, they're being, electrocuted, etc., forced to conduct these scams. And so it's a very, very worrying state of affairs.
Being someone who worked heavily in artificial intelligence, I cannot do an interview to you without including the AI topic and automation. How do you see these technologies being leveraged in the fight against financial crime? Are there any potential risk that organization should be aware of already?
In all honesty, Marco, it is our only solution right now. Investing in this technology is our only solution. AI obviously is a banner for a multiple different subsets of functionalities within the AI, plane, so to speak. And I think what's really, really important for firms is to take a step back and understand what their use case needs are before they jump into the technology. Okay, we need AI. Well, that's great, but what sub banner of AI do you need? Do you need predictive? Predictive analytics. We're not there yet. We really aren't. We're still at our infancy. So what do they need? And one of the things that many firms need to do before they even get to that stage is clean up their data sewage pits. People like to call them data lakes, but they're beyond lakes. Like these, you wouldn't even swim in this toxic mess. We need to clean up these data sewage pits. We then need to do a complete mapping of our existing internal systems to understand where are our sources of the truth. We have multiple sources of truth within our systems, and we need one central point of data to feed into these systems. Legacy systems and legacy, TradeFi institutions who have had multiple mergers and acquisitions over the years are finding this really, really difficult because they need to do a massive cleanup exercise before they can even explore the next step. That being said, this can be done simultaneously. We know transaction monitoring is a great example with HSBC. We all know TM systems don't work. Rule-based scenario systems do not work. We cannot bucket everybody into specific rules and scenarios and expect to identify illicit activity. It cannot identify complex networks within our books. So the problem statement was the existing system doesn't work. Well, let's fix that. In other instances, we need to go back to the process, to the risk controls. One of the things that I'm concerned about is I think we've over-siloed controls within our entire risk framework between compliance, op risk, credit risk, market risk. Even within compliance, many institutions have completely separated financial crime from regulatory compliance, operating as two independent silos. This needs to change in order to protect our customers and for the bank to operate most effectively, to identify client lifecycle changes so they can better service customers. Because technology is not just about risk identification, it's also about making sure the company is future-proofed itself for its own, let's be honest, its own ability to make money and grow. We need to look at ways that we can support the customer lifecycle, identify and second guess changes in the customer's needs so we can service better that customer. That's what people want nowadays. They want an ease of banking where it says, you know what, this is where I am today. I haven't even thought about the products I'm going to need tomorrow, but my bank already has, and they have me covered. And I know that I'm taken care of. So this is where we need to go in terms of client lifecycle management. This is where we need to go in terms of risk controls. We need to better holistically understand changes in profiles so we can immediately identify changes in patterns on accounts. And as I've said, some of those changes may be because of illicit activity, and then we can better protect our customers. So AI plays the number one role in this. I would like to see much more support and financial support from both the government and not financial from the regulators, but much more sandboxes from the regulators as to how we can do this better. I'm really, really excited actually about AMLA coming into effect early next year. The absolute synergies that we're going to be able to develop across Europe in our fight against financial crime through harmonization across financial crime frameworks, across FIUs, across kind of looking at technology, it is going to be a game changer globally. And we are going to, in my opinion, Europe, if we do this right, will lead the way forward. So AMLA, for me, is going to be the absolute flagship for Europe that we're going to be able to use to show how regulatory supportive technology can transform the detection capabilities and better protect financial integrity and our customers.
Thank you. This is something I'm very aligned with, and I want to maybe close this one-to-one interview with something forward-looking. So if we look ahead, what trends or developments, you in some part already answered this with your previous question, but previous answer, sorry, but well, I wanted to ask what trends or developments do you foresee in the financial crime prevention space over the next few years, and how should both organizations and consumers prepare for these changes?
The simple one is organizations. In order for innovation to happen, we need healthy challenge within teams. In order for that to translate into compliance, we need to change the look and feel of the setup of compliance teams. We need engineers in compliance. We need data analysts in compliance. We also need technical experts, regulatory experts in compliance. And we also need public side individuals who've worked in investigations, etc., Interpol, police force, etc., to be in that space. Combining those skill sets together will drive innovation. So the first thing first, in all banks, I would like to see a really nice dynamic of, different skill sets and thoughts coming into the discussion on how we can better create financial crime controls to better detect risk and protect the organization and the industry and the customers. So skill set advancement, not just increasing the skill sets of current compliance officers, but bringing diversity into the team and allowing that healthy challenge. Secondly, innovation requires psychological security, which means we need to be allowed to make mistakes. I need to see much more from regulators in that regard. I need to see regulators taking a step back and saying, right, sandboxes are great, but when things go live, I don't know if you mind me saying this, but shit will hit the fan in instances. And we need to be able to know that we are secure, to be able to step back and for mistakes to happen without penalties. And that's going back to my very first comment about the MAS as a wonderful example of a regulator that handholds to make sure that we do this the right way. Mistakes will happen, but what do we learn from them? So that's where I expect to see the regulators. I expect to see much more public-private cooperation, PPPs, public-private partnerships. I know everybody talks about it, but the information sharing between them needs to strengthen significantly. It shouldn't just be upward, i.e. from banks to FIUs and police forces. It also needs to be downwards. What are the new typologies? What are the new trends? What are the new financial scams coming through? banks need to be aware about this so we can immediately upgrade and enhance our controls and assist with identification within our customer base. And last but not least, as we've spoken about technology. We are throwing people and manpower at fixing solutions, are finding solutions in inverted commas within the financial crime space. It's not the answer. This is, I believe, in a 70% automation within this space with the right technology in place so that our experts can focus on really where the key risks sit. So technology investment needs to be at the forefront of this to work. So international cooperation, PPP, public-private partnerships, regulatory sandboxing, and kind of a little bit more hand-holding as opposed to enforcement, and also as well diversity within compliance departments and within banks. And last but not least, what I mentioned before, removing the silos between risk functions. It's a no-brainer. We separated it up to understand how they all work over the years. We've got that now. Okay, let's bring it all back together and let's make it work. Rome wasn't built in a day. I don't believe in a big bang approach either. That's when mistakes really happen and you can't see the wood for the trees. Slowly and surely we will get there. So I would love in the next 5 years to see really, really positive work happen in this space.
Thank you, Oonagh. And lastly, if people wants to get in touch with you, what's the best way to reach you?
Oh, LinkedIn, WhatsApp, or email me. So, as mentioned before, we have Raw Compliance, which is our social enterprise, providing free training through the Raw Compliance Hub, but also Virtual Risk Solutions, which we've just kind of reestablished as our global consultancy firm. We support in licensing, remediation, and most importantly, we're working with tech, AI implementation, and looking at, we've actually just currently about to roll out a virtual compliance officer to support day-to-day compliance. So I'm really excited about what we're doing. I'm a massive believer in technology and innovation. And again, I am just super excited to be part of an industry with professionals like yourself, where we really are making a difference by having the right conversations and hopefully inspiring some individuals to come up with some great ideas that we can really make valuable change and contribute to our financial system.
Thank you. Thank you for your kind words, and thank you so much for your time. It was fantastic to have you today on the show, and I hope maybe we can repeat this again sometime in the future.
Love that. I'd love that. And hopefully I won't speak so much next time.
No.
I will learn to speak less. That's never going to happen.
It was really great to have you. So thank you one more time. And if you found this video helpful, press the like button and remember to subscribe to my channel for more insight into regulatory compliance and financial crime. If you want to actively support this amazing community, check out my Patreon link, which as always you will find in the video description, or you can send your love with a super thanks directly on this YouTube video. So that's all for now. Thank you, Oonagh, one more time, and thank you all for watching. Until next time, see you soon.